Hi, Jonathan York by Financial Partners, looking at investment markets. Big week for US equity markets this week. You've got the Fed meeting. No one expects them to change anything on rates, but it'll just be interesting to see what commentary comes out. Now, interesting, sort of Fed officials have been coming out and trying to pour a little bit of sort of cold water on the sort of market's enthusiasm in terms of sort of rate cuts. The market was pricing in sort of 4 or 5 cuts this year. Potentially now the Fed officials are sort of hinting that it's maybe sort of 3, and they probably come a little bit later than anticipated as well. Also got a lot of the big techs reporting as well. Now, this is on the back of a pretty strong GDP figure that came in at 3.3%, which was much stronger than anticipated. But interesting, the personal consumption expenditure, the sort of Fed's preferred inflation measure, that was down and still on a clearly downward path. Currently 2.9%. Now that's well off its peaks of 5.9% earlier in the last year. That's sort of moderated interest rates a little bit. 10 years currently around sort of 4.03. 2 year is 4.36. Now, just on the earnings, a couple of the big heavyweights reported this week. Microsoft came out, beat expectations, but maybe guidance was a little bit maybe softer than anticipated. Now, that saw the shares back up, but so far in 2024, Microsoft shares are up around 9% compared with the S&P up around just over 3%. Alphabet also reported earnings but sort of better than anticipated in terms of revenue, etc. But their ad guidance was maybe a little bit softer than anticipated, and their shares come under a little bit of pressure as well. But we've still got Amazon, Apple, and Meta to report, and certainly it's been this magnificent 7 that have really been pushing equities along. Interesting as well, the IMF have updated the global growth for 2024, pushing that up to 3.1% now. That's an increase of 0.2. Although there is still a little bit of a recessionary watch in the US, those percentages are coming down rapidly. Because certainly if you look at the US economy, it is pretty robust. You've got pretty decent growth going forward, as highlighted by that latest GDP number. You've still got a jobs market that is still gaining each month. Inflation is falling, and interest rates are coming down. Now, oil has nudged up a little bit higher still. It's currently sort of 77.80 and change. That's on the back of that Iranian drone strike that actually killed 3 Americans. Now, while both countries are stressed they're not looking to go to war with each other, clearly there is a bit of pressure on the US administration for some sort of retaliation. Now in the UK, the Bank of England left rates on hold. Which was pretty much as expected. But again, the UK economy has proved relatively resilient. They were sort of forecasting a pretty dire sort of recession sort of this time last year, and that really didn't materialize. Now, in the EU region, their economy is sort of a little bit stagnant at present. It did avoid recession. The ECB meets this week and again expects to leave rates on hold. Though it will be pretty interesting to see what happens with the ECB and also the Bank of England as well, because if the Fed does cut interest rates as expected in sort of between March and June of this year, will there be a little bit of pressure, and will those central banks follow suit? Now in Australia, the December retail sales was a little bit disappointing. It was down 2.7% versus November that was plus 2.2%. But again, potentially distorted with the sort of Black Friday sales and Cyber Monday sales, which obviously pushed up the November figures and maybe sort of saw a little bit of that spending sort of brought forward from the December month. Now here in New Zealand, the Reserve Bank economist came out and gave a really sort of pretty somber view of the New Zealand economy. Still a little bit sort of sluggish out there. Inflation still needs to be brought under control, and rate cuts are way in the future. But as with other central banks, it'll be interesting to see what does happen if the Fed does cut as anticipated between March and June of this year. And interestingly, one of the big high street banks has cut its mortgage rates. But so far, the New Zealand economy seems to be pushing on at a pretty good rate, obviously being helped by a pretty good summer as opposed to the pretty dire summer we had last year. And as we are in February now, it'll be interesting with the Reserve Bank meeting this month, just to see what sort of comes out. No one anticipates any change in interest rates. The OCR will remain at 5.5%, but it'll just be interesting to see what sort of commentary accompanies it. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.